What is up, YouTube? Welcome back to another video on high altitude investing. In today's video, I am going to be talking about 5 mistakes every cryptocurrency trader should avoid. Some of these might sound a little simple to you guys, but they're super powerful. And honestly, usually the most powerful things are very simple. So if you guys are not a subscriber to my channel, go ahead and hit the subscribe button down below, as well as sharing these videos with your friends. I'm dedicated to uploading videos as I see fit as we go through the bull market, because there's a lot of money to be made inside of these markets, and I want to make sure you guys know how to do that. So without further ado, let's get straight into the video. I am also going to be running over Bitshares at the very end of this video. I've been getting a lot of questions about Bitshares, so make sure that you guys stay clear till the end so you guys can get my analysis on Bitshares. So the very first mistake that I see people make as cryptocurrency traders is they are buying high and selling low. I know this seems so simple, but it literally is so powerful to remember this. One of the things I've noticed is people just get so scared because of their personal emotions, and it's something I experienced a lot when I first started. But you guys, you cannot let your personal emotions control your trading. One of the things with trading is control of your emotions. You have to learn how to mediate your emotions. I personally do meditation as the most powerful thing I've found to help with my emotions in trading. It really just keeps a clear mind, a clear head when you're looking to make your trades. And so with the movement that we've been seeing on Bitcoin recently, Bitcoin has dropped a little bit, you guys. I mean, a lot of people are scared right now. A lot of people are feeling that emotion, and a lot of people want to sell. But really, this is a huge red candle. And when you have a huge red candle like this, it's very, very obvious what you're supposed to be doing. The opposite of what the rest of the market is doing. Remember what happened during coronavirus back here? A lot of people got really, really scared, but I made continually videos about how we are going to go higher, because I knew that when you have these big red days, it often leads to a massive run up inside of the market. So you guys, I'm not selling any of my Bitcoin. I'm not selling any of my BSV. I'm not selling any of my crypto. In fact, I've been looking to buy. I've been buying more Dogecoin. I've been buying Shiba Inu. I've been buying a lot of different projects. And that's kind of my personal perspective on buying high and selling low. The other mistake that people make is the opposite of selling low, which obviously is the buying high aspect. And buying high is really, really tempting for people. And there always is some exceptions to the rule. I mean, sometimes a lot of people will consider this buying high, buying up here. But you guys, this is not buying high. This is in a massive uptrend, and you're buying a dip inside of an uptrend. So you kind of have to understand the context. That's one of the reasons that I zoom all the way out to these bigger time frames. It really helps put clarity on the context. And that's personally why I'm bullish on Bitcoin right now. I have no problem buying more. I have no problem with the movement in the market. This is stuff I've seen over and over and over again. So I know it sounds super simple, but do not buy high and sell low. If we're in a massive uptrend, buy the dips inside of that uptrend. And that's exactly what we're seeing right here. It's not buying high to buy a dip inside of a massive uptrend. So yeah, you guys, that's probably the number one thing that I see, especially with new traders, is that they end up buying high and selling low. And this really screws the majority of their profits, unfortunately. But it's also a good teacher. Just don't make the same mistake twice. You know, keep learning from your mistakes. Keep applying your techniques. Learn self-mastery and self-discipline when it comes to trading. The other mistake that I see everybody making is trading based on news or based on fundamentals. They think that they're super smart, and that if they just go read a whole bunch of news, that they could be super smart because they can learn all about what's going to happen, and that they're going to be way smarter than all these people with their damn charts. I'm telling you right now, I have never seen a trader that played based on news and fundamentals that was effective or as profitable as the traders that trade based on technical analysis. And I've been doing this since 2015, you guys. You realize it's 2021 now. I've been doing this a lot of years. So you have to remember trading news and fundamentals. I know you want to be smart. I know you want to pull out all these little things that make you sound smart about understanding the fundamentals of the project. And it's not bad to understand your project. It's not bad to understand fundamentals. It's just bad to make your trades based on them. And it's just bad to make your trades based on news. The news is the most manipulated source. I can tell you in the 2017 bull market and the 2018 bear market, almost the exact top was when they were telling people to put the most money in XRP. And the exact bottom of XRP is when they were telling people to take all of their money out. And they actually made a tutorial on how to buy at the top and how to sell at the bottom. So news is not how to be profitable in the markets. Markets move because of human emotion. There's coins right now that have terrible fundamentals that are rising very well. And you can't get angry at that fact. You have to implement it. You have to understand it. And so if you want to understand it, you have to understand technical analysis. And technical analysis will take you out of the trap of trading based on news or purely based on fundamentals. You know, I'm invested in BSV right now because of the chart pattern, but I also like the fundamentals of the project. I like how fast it is. I like the apps that I'm using on the project. And those are fundamental reasons that I like the project. But I did not take my trade based on those reasons. I took my trade based on what I'm seeing right in front of me right now on the chart. And I know this is Bitcoin, but it was really because of the chart. BSV to me is in a massive upward accumulation channel. And I expect it to break out of this channel and see massive upside continuation. So that's what the chart is telling me. So you guys just avoid the trap of trading based on news and fundamentals by calibrating yourself with the weapon of technical analysis. The other thing that people make a huge mistake on when they're trading is taking too large of position sizes. I know when I sold half of my Bitcoin into BSV, a lot of people were like, Dallin, you should take all of your Bitcoin and put into BSV. And I'll be 100% honest with you, I trade based on risk management. Taking half of my Bitcoin was already a huge, huge risk to put it inside of BSV. And although I take calculated risks on a regular basis, so I'm extremely comfortable with that, I'm not about to take a over too much risk for the reward. You know, I'm willing to do a calculated risk that's intelligent, but I'm not, you know, it's like jumping off a cliff, right? You might be able to jump off a 10-foot cliff and land. And then if you learn that enough, you might be able to jump off a 13-foot or 14-foot cliff. And you might be able to get comfortable with rolling off of these. But if you go to jump off a 50-foot cliff, you're dead. That's uncalculated risk. Or 100-foot or 200-foot, you're probably dead. And so you just need to understand that. That's the same thing with trading. That's the same thing with taking risk on your investments. For me, putting half my Bitcoin in BSV was a calculated risk, something I'm comfortable with doing, something that doesn't seem too crazy to me. So yeah, you guys, that is very important. Your position sizing, as a general rule of thumb, keeping some US dollar tether in your portfolio at all times, 10 to 15%, super beneficial for buying dips. Keeping some Bitcoin in your portfolio at all times, a good percentage, helps stabilize your account since it has the least volatility out of all of the cryptos. And then also keeping your altcoin positions reasonable, you know, not going 100% in on a single coin, not going 100% out of the market. It's also bad risk management to be 100% in the dollar, because if crypto starts mooning and then the dollar sees what happened to the German currency in the 1940s, where it lost 100% of its value and people started using their fiat currency as wallpaper on the walls. So that can happen. So having 100% in on the market and 100% out, both bad risk management. You need to have a balanced portfolio that makes sense, that does take advantage of some risk, does have risk on, but not to the point where you're jumping off a 50-foot cliff. All right, so the other mistake a lot of people make in trading is they trade with money that they cannot afford to lose. People are always trying to put loans in. People are always trying to come out of bad situations by trading. And I'm not saying you can't come out of a bad situation with trading, but you have to be smart about it. You don't want to just you don't want to take so much risk again that you're jumping off a 50-foot cliff. And that happens with people. They get so excited that they go pull out massive loans, and it usually is at the same time that they're making the first thing that I told you not to do, which is buying high and selling low. So for example, there was a lot of people on Bitcoin that when Bitcoin hit $20,000 in the last cycle, there was a lot of people that took out massive loans and started buying right here because they believed it was going to go much, much higher. And it could have, but it was bad risk management because they were buying super high. They weren't buying any red candles at all. They didn't have a plan, and they were over leveraged. They were over too big of a position size and with money that they can't afford to lose. And so if you lose $200,000 and then now you're just in $200,000 of debt, how are you going to get out of that? You know, there's ways. I personally have seen a lot of wealthy people have gotten themselves in bad situations and gotten out of it, but that doesn't mean you have to, and that doesn't mean you should. You can do it without having to do that. So learn from other people's mistakes and just learn how to buy the dip with money that you can afford to lose. Be intelligent about it, and then you'll get out of a bad place. And I'm a risk taker, a big risk taker, but I do it intelligently and wisely. So that's what I wanted to keep you guys aware of, is just don't trade with money that you can't afford to lose, because you don't want to have to start bumming off of people and then having a bunch of debt. I've been there. I've had debt. I've bummed off people. You know, I'm still paying back debt to the IRS right now. Full disclosure. So you have to understand the market, and you have to be smart. Learn from my mistakes. Learn from other people's mistakes. Don't be stupid. All right, the other thing that people make the mistake of, and this is actually the fifth reason, the last one, but it's also one of the biggest, is they get in this for the wrong reasons. At the start, when people want to make transformation in their life, a lot of times it comes from, oh, this person doesn't like me. Let me show you how much better I am than them. And then that's their why, and that's their only why. And what do you think the fruits of that why will be? 10 years out, 15 years out. You might even make the money, but you might end up being very empty inside and have a bitterness and a resentment that is not serving you. So make your why purposeful. My why for investing and teaching investing is to financially empower the people. If I can financially empower myself first, so I know how to, and then my friends and my family, and then my community, and then my country, and then my world, that's my why. If I can help somebody that doesn't have food on their plate have food on their plate, that's my why. And that's sustainable. That's something I can have as a why for the rest of my life. I won't fall into resentment or depression because it's something that's real and genuine and comes from my heart. So make sure that your why comes from your heart. If you don't do that, if you make your why, oh, I'm mad at my ex-girlfriend, so I want to get up on her. And trust me, I have felt those feelings before. You know, when I broke up with my ex-girlfriend a couple of years ago, the thought came to my head, oh, I'm going to just do it bigger and better. And then I realized that that was not coming from my heart. That was coming from my ego. And it wasn't going to serve me. So I let go of that why, and I made a bigger and better why. And it's carried me. It's purified my personal state of emotions. It's purified my feelings towards my ex-girlfriend. And it's allowed me to see people from a better perspective. So have a strong why. Strong why will carry you through your whole life. and make trading worth every moment of it. And if you don't have a strong why, you will probably end up giving up at some point. So have a powerful why, you guys. That's the big mistake I see a lot of people make. It's not just about getting super rich so you can do a bunch of superficial things with your money. It's about helping our community and our world. And that's really what this is all about, you guys. And if you can have that mindset, you will be unstoppable. So thank you guys so much for tuning in today's video. I hope that you learned something. Before we go, I am going to run over Bitshares because Bitshares, I see a lot of value in Bitshares, you guys. And I personally think it's going to moon. Just let me remove my previous drawing tools. And I know a lot of people get scared sometimes when I tell you to buy something. It's been rising ever since I told you to buy, but it didn't go straight vertical like some of the other projects I've told you to buy. And so you just have to understand some of these other projects take a little longer to build their momentum, but once it breaks out, especially once it breaks out of this horizontal trading range right here, which the resistance of this trading range is about 13 cents, and the support is about 7 cents. Once we break bullish out of this horizontal trading range, I do expect Bitshares to see a 100x this cycle, just like I said originally. So thank you guys for making those comments and reminding you to keep you updated on Bitshares. I am not changing my position on it. This is a very, very bullish project and coin. So thank you guys for tuning in today's video. I hope that you learned something. Share this video with your friends. Join the Discord. Links are in the description for that. Also, you guys, go to highaltitudecrypto.com today if you are interested in becoming one of my VIP members. This is an exclusive group. I don't let everybody into the group, but if you send me a Discord message or an email, I can help you get set up today for only $9.99 on the 1 year and $24.99 on the lifetime. The reason why I made this group, like I said, is to help financially empower the people, and that is what my Discord is all about. So if you're ready to transform your trading portfolio, your life, get some learning videos behind it, and see what trades I'm personally taking on a regular basis, make sure that you click the links in the description below to join that. Thanks again for tuning in, and as always, stay profitable out there.